We start with another record day for the markets. The S&P, Nasdaq, and Dow all closing at new all-time highs. The Nasdaq, the big standout, with a 2.5% gain. The VIX remaining in check. The 10-year yield at its highest level since late March. All of this playing out on Wall Street as this plays out in America. 40 criminal cases have been launched in the wake of yesterday's siege on the U.S. Capitol. Top advisors to the president, including Transportation Secretary Elaine Chao and former Chief of Staff Mick Mulvaney, resigning their posts, and the Democratic leaders of the House and Senate both calling for the president to step down immediately. So following one of the darkest days in American history, stocks hit all-time highs. Is this more proof that this record rally is strong? Guy.
100%. I mean, proof positive. And I'm not pretending to be bullish because I'm anything but what I'll say is if on Tuesday night, Mel, we play this game from time to time, you had said all the things that were going to take place yesterday and then said, given that, Guy, what do you think is going to happen? I would said the Dow's down anywhere from 800 to 1,000 points. S&P, 75 to 100 handles on the downside. Bonds are going to rally. Maybe the 10-year gets back to 80 basis points. Maybe you see a relief rally in the dollar. Gold will rally. And the VIX will spike to 30. None of those things happened, which is remarkable. And I think it speaks to the fact that people will dismiss it and say, look, as horrible as it was, it really doesn't have impact on markets, on businesses, on the economy. Okay. But I think what more speaks to the fact that the market is so addicted to the hopes of stimulus, the Fed balance sheet growing, all those things, that it is clearly impervious to any news that historically would be very bad for the stock market.
If one was a believer in a pullback, a correction of some sort off of record highs, yesterday gave you every single reason, Karen, to trim your position. And while we did see a dip in the markets, it still held on to gains. The yield still stayed above 1%. I mean, all these things just, even during the session yesterday, as this was all unfolding, didn't really dent the markets too much.
Well, it didn't. But remember, as crazy as yesterday was, we also had some certainty, which was what the Senate would look like. So even though I actually thought there was a chance of a blue wave that wasn't being priced in and that the market would react to a blue wave by trading down initially and then up on the hopes of a greater stimulus, an infrastructure bill. And so I think the market was sort of adjusting to that idea, greater stimulus, certainty, an infrastructure bill. If you looked at some of those infrastructure stocks, they traded up very, very sharply. And I think Guy's right. It was just, they were sort of dismissing the long-lasting effects of the horrible events of yesterday as something that, is fleeting, as terrible as it was. And then I think there was just money on the sidelines or some tax selling people did at the end of last year to, lock in some losses where there were and then putting more money to work. All that having been said, though, it was kind of surprising to see the second day as well.
Right.
So this is setting us up for a big down day. Who knows when, though? I can't predict it, but it'll happen.
I mean, if you wanted to game out what could have happened yesterday in terms of what the market could have priced in, the worst case scenario was that what? We know that Joe Biden will be sworn in on January 20th. So no matter what happened between now, in the next 2 weeks, less than, it's a very finite amount of time. So in a way, Dan, maybe the markets were just sort of saying, you know what? We know there is clarity even despite this chaos.
Yeah, I think that is the point. I think Karen and Guy kind of nailed it, and you allude to it. I mean, we do have that clarity. I think the one issue, or I guess the one negative would be that if Biden now with the Democratic Senate said we're going to raise taxes right away. I mean, that's really the only thing that might have kind of spooked investors here. I'll just say this, it's been a very volatile week. We started off Monday. I think the S&P was down almost 2%. We're obviously about unchanged now on the year. It's 4 trading days into the year. If you think Monday's lows were the lows for the year, then you haven't been doing this very long. This is not how this works. Even though it seems like a very Goldilocks situation here, these sorts of sell-offs will come very quickly. When you think about that September 2nd high up there at 3,600, well, now we're at 3,800. We could be back there in one trading day. That would be down about 5% or so. And let me just tell you this. I know we're going to talk about the Bitcoin and Tesla later. There's a day where Bitcoin's going to be down probably 10 maybe $15,000 in one clip. What does that do? That has proven to be very correlated to a lot of risk assets here, a lot of the same investors there. So I think there's a lot of pockets of overexuberance right here, and there's a lot of reasons to ignore them until they don't.
We've had certainly stellar performances in this young year of 2021, Tim. Russell, for instance, up, 6% on the year so far? The KRE is up 11% for the year. Materials are up 6% for the year. I mean, some extraordinary moves just in a few days.
Well, and I have to take this back to 2020. The market's up almost 18% in 47 sessions. So let's call this what it is. It makes almost the last 24 hours or 48 hours extraordinary. And then adding in, we talk about markets as the market itself as a discounting mechanism. My view is when we start to really process a tax hike, which will probably come, I don't think it can come in 2021, especially when we're flooding the world with money and fiscal to overcome the headwinds in the economy. But to be clear, I've said this before, the multiplier effect from higher taxes is significantly stronger than a one-off fiscal bill. So let's not get terribly excited about fiscal in the medium term. In the short term, that's all the market really cares about. But when we start to hear about normalized earnings out for 2022, that's going to be another time to really be very careful about where we are in the market. But in the short term, this rotation that does have, I think, a fair amount to go as we're going to talk about growth into value. We're going to talk about the reasons why the tech companies have headwinds. But I think a lot of this trade continues, and this is a broadening of the market that, frankly, a lot of people wanted to see. But we've come from an extraordinary place to be where we are, and these are the moments when we've looked back, when we've had pullbacks. Half of it is about where you have come from, and the slope of this move higher is very, very steep.
So is the slope of the yield curve and the climb in the 10-year yield as it marches to 1.1%. We've talked about how it's a tailwind for banks and that sort of trade guide, but how about being a headwind for tech? Tim mentioned tech. Could we also see increased regulation or increased taxes because of that blue wave, adding sort of to the pile of potential worries there?
Yeah, and I do think you will. I'm hard pressed to understand why it rallied in such a meaningful way today, given what you just mentioned about the bond move. And I think people will correctly say to a point that this bond move is a good thing. But look at the speed with which we went from basically 90 basis points where we were stuck to where we are now. That's somewhat concerning. It's moving very quickly. And I've said a number of times, if you're playing at home, the line in the sand comes in the form of about 155.5 in a TLT, and you see how quickly we traded through that level. So here we are. The bond market is moving. I think at a certain point, the way I think the dollar going lower is bullish until it's not. I think the same thing with the bond move. And we're coming precariously close to those things. Yields going higher, dollar going lower. I understand why people would say, and I hate the term, that's Goldilocks. It ain't for much longer, in my opinion, Melissa.
Shepard Smith here. Thanks for watching CNBC on YouTube.